All right, we are here with our first Charting 101 course. We're going to go over exponential moving averages here. And you'll find that there's subtle differences between simple moving averages and exponential moving averages. The fact with EMAs is that it gives more of a weighting towards recent price action. So it's going to give it a heavier weighting as opposed to a previous candle. So right now we're looking at the 8 EMA and the 21 in green. So with these EMAs, it's the movement is giving more response to this more recent candle as opposed to 8 candles back, which it just kind of gets caught in the mix. And with the EMAs, it's very basic. It's just taking all 8 previous candles, adding it up, and dividing it by 8 with a heavier weighting at the more recent candle. And people ask, is there a difference between simple and exponential? There is, but nothing too drastic. So you could go either way on the candles. My favorite picks are the 8 and 21. Some people use the 9 and 20, 9 and 21. Algos usually use the 5 and 21 for when there's a crossover. That's their trigger. That's when they're selling. That's when they're buying. Those are the points on top of, they're looking at a specific candle, like a topping pattern here, where you have this this falling pattern where it gets up to this peak here and then gaps lower on the open and then and just runs right through this 8 EMA and then falls lower, taps off this 21. So we're looking here at Carvana on the daily, and it's hitting off this. It bounced off this 21 EMA and then ran up. And what you find with these moving averages is sometimes it can just bounce in between 8 and 21 when it's not trending, which you can see here. It takes a little time and then drops off, kind of moves around and runs up. But really, I just wanted to show this here with Carvana because this is a good swing trade opportunity. What you see here is it's definitely on an uptrend. Pulls back a little back to the 21. So now we're looking for a good entry point for a swing trade for the week ahead. The stock is still a beast, still in the growth phase. So what you can do is pull over a 1 hour EMA, both 8 and 21 period now. Now you see this this topping pattern where it reaches that point and sells off pretty dramatically and continues to sell where it's hitting this down here. It's hitting the 21-day moving average, and then it's starting to build up. What you have here is the is a nice flag pattern developing, and then with that, with a swing trade, is you see how it falls, and then it's pulling up to this point. So it's getting close, and again, it's bouncing within these two, this 21 and 8, and then it's gonna eventually pull through and cross over, and then you're going to get another rip. You see it here where this one ripped, this one came down, and then ripped again. So you're seeing it here, and this action's getting small. These candles are getting smaller and smaller on the hour until eventually you get a rip. Now there's also the chance that where it could fake you out. It'll go above and then it'll drop. That's just how it goes sometimes. You hop in and immediately drops. But with this market right now, we're having some of the Trump tariffs with China, some negotiations with NAFTA, previous NAFTA, now it's Canada and Mexico's separate treaties. So that action's coming into play. But with Carvana, it's at a growth stage, and it doesn't seem to be responding the same way to the market as some of the other stocks, some of the S&Ps or some of the NASDAQs like Apple and Amazon. So this one, you can see it forming, and then if we pull it back to the daily, we could see it's pulling up, and it's a possibility of a cup forming. So if it starts running up, it's going to retest the high here of this breakdown candle, and then we're going to see where it goes from there. But as long as it stays about this 21 EMA, I'm a definite buyer. and I'm looking to enter it in this week as soon as the market gets a little bit more momentum. Now, Carvana is a good example. We also have another stock that's been catching a good bid even on Friday when things kind of sold off. Is Roku, and we'll just peel away everything here and just get it back to the EMAs. But what you see with Roku is another daily pattern where it's in an obvious uptrend, showing a lot of momentum, catching a lot of bids. And we're just looking for an entry point. It looks like it came back. It didn't test the 21 here, but it came close. So what we're looking at is this is a clear uptrend. So we're just looking for an entry on a shorter time frame with our hourly. So you can see that it had that uptrend. It continues with the uptrend. So what we're looking for here is sell off, sell off, sell off, and then it cuts through here, which would have been a nice little scalp trade for the day, because it opened up here, did a little consolidation for a minute, and then around lunchtime it ripped, and then next day had a huge sell-off, probably something with the tariffs. But then you see this candle here, this kind of reversal candle. You see a high volume sell-off, and then this reversal kind of indecision with these long wicks. Boom, rips up. Could have entered in here and set your buy order. Probably a good 20 cents above. And it definitely would have hit on here where you had this great rip, and then you see this nice flag pattern forming. And again, we're in this uptrend on the daily, and the uptrend starting here. So this would have been your buy point in here. So that's something for the swing trading. Now, something more for the scalper. You're gonna get even more defined in the point and kind of hone in on what you're doing, and really focus in, because we're going to go just for a scalp trade. We're just doing something intraday. So your anchor chart is hourly here, and your entry point, I have it at just kind of a Fibonacci number, 13 minute, just to see, because you get a little bit, I think, a little bit better spikes in the price action, especially with the 8 EMA. So you can see here's Roku, and still in that uptrend. You had that entry point down here, but something like the pot stocks, let's go for those. CGC has really been all over the place. So here you have your anchor chart at the 1 hour, and you can see here it had crossed here, came down, never crossed back over, just kind of touched that 21 period, and then started ripping. So you can see that these are synced up here. The crosshairs, so you can see that it comes in on the 13 minute chart right about there. So let's just focus in on that. So you can see here we're in an uptrend, 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 and then we're just looking for an entry point for our trade. So you can see that this is getting a little bit closer, but it's still in an uptrend. But these two, this 8 and 21, are getting a little bit closer here. So that's kind of a key where it's building that tension, because you can see when the EMAs get close together, it kind of it can't stay stagnant. It's like an ocean. You know, it stays flat for only so long, and then it erupts to the upside. You know, just like you see in here. So you can see a little bit of a pattern, kind of a little bit of indecision, but at the same time you have this 13-minute crossover where once you start seeing it rip to the upside here, you'll start seeing it kind of move and kind of get this separation, which is another key point with these. What really good example you can see is with the VIX more recently. You have this, actually let's cut it back to the VIX. That one had a little bit too much noise. So I'm going to wrap this up in a few minutes. So we'll get to the point here where you have this anchor chart, clear uptrend, and this is a much better example than the pot stocks. So you have this clear uptrend coming down, testing the 21 period moving average, and then running higher. So here you have it ducks down below the 21 period, then boom, here's your entry. And you get that clear run up, falls a little bit, but then here is a definitive move to the upside. So you get that nice scalp right there, right in the morning. And here's your uptrend, boom, all the way up to 1554. And then it hits here, goes a little bit higher, and then just continues to fall. So obviously it engulfs 2 candles. So you're looking at a pretty substantial move. Kind of tested this this high again here, but at the same time, on a larger time frame, it's kind of making this flag pattern. You can see right here and right there. So definitely something to keep in mind for the week ahead, that you might see a another burst in the VIX to the upside, which will lower, should send other stocks going lower for the week. But with that, just wanted to put this out here. Just really basic charting 101, EMAs, as basic as you can get. You know, charts are moving up. See that spacing? That means price action is really moving to the upside once you get that spacing. And with the VIX, this works for every stock on every chart. Forex, futures, can't beat it. All right, and then we'll continue on with the next class. And I will make my updates early tomorrow morning with my stock picks for scalping and swing trades. We will see you in the morning.